Ladies and gentlemen, good day and welcome to the earnings conference call of Everest Kanto Cylinder Limited. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Aisha Shah from CDR India. Thank you, and over to you, ma'am.
Good afternoon, everyone, and thank you for joining us on Everest Kanto Cylinder Q1 FY2024 earnings conference call. We have with us today Mr. Puneet Khurana, Managing Director, and Mr. Sanjeev Kapoor, Chief Financial Officer of the company. We will initiate the call with the opening remarks from the management, following which we will have the forum open for question and answer session. Before we begin, I would like to state that some statements made in today's call may be forward-looking in the nature, and a disclaimer to this effect have been included in the results presentation shared with you all earlier. I would now request Mr. Puneet Khurana to make his opening statement. Over to you, sir.
Thanks, Isha. Good evening, everyone, and thank you for joining us for our earnings conference call. I will initiate the call by talking you through the operational and financial performance, after which we will open the forum to have a Q&A session. Softening demand for CNG cascade segments in the domestic market and lower traction in the international market primarily impacted our revenue and profitability. In Q1 F24 compared to Q4 FY24, at most you would have been aware our base for Q1 last year was still high as the CNG sales started declining last year from the June month onwards. So the Q1 FY23 was still relatively better quarter. In Q1 F24, our OEM CV sales remained stable on a QOQ basis, providing support to our performance. On consolidated basis, revenue stood at 268 crores in Q1 FY24 compared to 298 crores in Q4 FY23 and rupees 381 crores in Q1 FY23. On a standard basis, revenue stood at rupees 166 crores in Q1 FY24 compared to 180 crores in Q4 FY24 and rupees 270 crores in Q1 FY23. In standard business, the CNG segment stood steadily at approximately 60% in Q1 FY24. Our profitability was impacted owing to negative operating leverage due to lower revenue on a standalone basis. In Q1 FY24, EBITDA stood at 18.2 crores with a margin of 11%. PAT stood at 9.6 crores. And on a consolidated basis, EBITDA stood at 36.9 crores. PAT stood at 9.6 crores. And on a consolidated basis, the EBITDA stood at 36.9 crores. And with a margin of 13.7 crores and PAT stood at 21.8 crores. Overall, we've been able to register better revenue performance going forward. We hope to improve the consolidated margin to around 14 to 15%. Despite the challenges, we hold a positive view of the prospect of CNG cylinders within India. The government is clearly looking to encourage eco-friendly natural gas through fiscal incentives and implement the policy that can result in structural and reduced CNG prices compared to other fuels. Furthermore, the ongoing expansion of CNG distribution network throughout the nation signifies the government effort to promote sustainable growth and reduce greenhouse gas emissions and pollution. The government plans to grow CNG network from around 5,000 CNG stations to over 16,000-17,000 CNG stations by 2030, means that the demand for ecosystem of CNG cylinders should grow in the future. As we move forward, we recognize that the current market challenges impacting our businesses. Our team is focused on leveraging our core competence and engaging with both domestic and international customers to drive our business, building our strength on CNG market. Our team are actively working strategically to enhance penetration in PV market and committed on quality of customer satisfaction. We believe that we will position to capitalize on the future of the CNG vehicle market. On that note, I come to an end to my opening remark and would request the moderator to open the forum for any questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ravi Naredi from Naredi Securities. Please go ahead.
Sir, company is going downward continuously, no recovery since long. So will you say few words when it start recovering in near future?
Yeah, surely, definitely we will, indicate how we just want to tell you the market the situation of the business currently, and we'll continue to update you if there's any, changes that are happening in the business.
So what is the current situation? Can you update few words will you say?
Mainly the company's focus has been on, on CNG, where we've seen, the prices of CNG, have risen from around 50 rupees per kg to about 83 rupees. So this is, currently impacted the overall scenario in the industry, which was growing quite well. So this has been the major factor, being the war that is taking place in Ukraine, where the natural gas prices internationally have also gone up. So this has been a major impact that we are facing in the business. But what the positive side is that the CNG infrastructure is already in place, and going forward, that the movement of CNG hasn't stopped, but it's slowed down. So it's a matter of time when you will see that the business revival will happen. Only thing is, this war has just been longer than everybody expected, and of course there's still uncertain when this will come to an end. But whenever it does, the prices of everything will, like at least natural gas prices, will come to some realistic terms. And also globally, what is happening is lots of development on new fields is coming up, new LNG terminals are coming up. So the prices of natural gas probably going forward will more stable, and there will be availability of natural gas coming from other countries, where so dependence on certain markets like Qatar and Russia and other places will definitely reduce going forward.
And what is the gas price currently hovering in India?
So, government has had some changes, and, they've kept the gas price around $6.5. There's a band, it's in a band.
$6.5 into, it is, okay. So, it converts into Indian rupee. What will be the cost now?
Sorry? So, the cost is what you see on the CNG station. This is the cost. This is the price of the CNG. Now, getting into certain details on, where it should be, and, these things are again, the prices are decided by the MOPNG. So, we really don't have much say on the pricing.
And
but it is a matter of time, where these things will. You see, the business fundamental is very strong. It's a sustainable business model. So it's a matter of time that you will see that the business will come back.
And this high value addition are you making in manufacturing process? How it help us to capacity increase utilization in future? And what is the capacity utilization we are working at present?
So currently it's around only 55%.
Only 55%. And how this you just show in the investor highlights, how value additions are you making in manufacturing process? How it help us to capacity utilization to increase?
So definitely, for capital, for value addition, we are definitely introducing new products like composite cylinders and other things that we are working on. So definitely they will add, more value add to the business.
Can you tell something about this financial year 24, how we will perform or how we will deteriorate more? Because this is a very big question on...
let me give you some perspective. That, what is happening is that, during when things started slowing down and CNG prices started moving up, there was a lot of inventory blocked at the end of at the CV customer end. Now that inventory is freed up. So you can get some perspective that how now that the market, so yes, the market may not be at that level, but the market is coming back, and so the sales will definitely reflect.
So this 24 financial year, you mean to say it will improve day by day?
It should, yes, correct. It should improve day by day. Yes, you're right.
Okay, thank you.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1. The next question is from the line of Abhishek Getam from Alpha Invesco. Please go ahead.
Hello, sir. Am I audible?
Yes, we can hear you.
Yeah. So, how I understand is on the OEM side, our growth pocket is mostly on the LCV side or the last mile delivery. Is that a right assumption? Understanding?
Sorry. Can you repeat that? Sorry, what, last mile? Sorry,
I meant that on the OEM side, OEM sales.
Yes.
Our exposure is mostly with the LCV guys or the last mile delivery ecosystem. Is that right understanding?
It's sort of like we supply.
No, so we are supplying to all sorts. In the CV segment, all sort of vehicles that are being made on the CNG, we are supplying cylinders to that.
Yes, but the CNG sales also in the CV are mostly in the LCV segment, right? Very few in MHC.
No, it's in all in trucks, buses, LCVs, in every segment. Now CNG is available in every segment.
Okay. What would be a split be between buses and then CV?
No, that I don't have that kind of detail. We don't have that detailing of split.
Okay. So sir, another channel check suggested that waiting period on CNG CVs is around 30 to 40 days, and on diesel CVs is around 10-15 days. So do we see a destocking sort of coming in this segment, and then we can have a couple of few good quarters, or how is that scenario?
So definitely the inventory level right now at the CV level has become very low. CV level, it's become quite low. So now what they're doing is they are manufacturing. See, another thing is, because the business was growing so fast that the CV, the inventory levels went very high. So they actually took some time to liquidate all the inventory. So now what you're doing is now they're only manufacturing what they're selling. So there is I don't think the gap between the customer and the product is too much.
Okay.
Yeah.
So, but sir, they're making something and on make to order. So this there's a long waiting period.
Just now it might be on just to on order basis only, make to order only.
Yeah. So make to order, so that will elongate the buyer's time, right?
Yeah, probably. Yeah, probably.
Okay.
Because the situation doesn't stabilize, because this with the gas prices like this sudden surge, that nobody expected that this kind of surge, a product that is at 45-50 rupees will suddenly become 85 rupees. Nobody expected this kind of surge.
Right. So if OEMs stick to make to order, so what is exactly, I spoke to dealers, what they are indicating is, since it's made to order or waiting periods are long, customers are sort of preferring to move to diesel because the availability is faster. So do you think this will hamper the OEM sales growth for us?
I think customers who are buying CNG because there are availability of infrastructure in their area.
Okay.
of course, there are lots of advantages with CNG that the customers are getting. So the customers who are choosing CNG, but the point is it's a marketable product. Only thing is that the price difference, the customer is just in a shock situation because he didn't realize that the margin that he was making on CNG is suddenly shrunk.
Yeah.
So, he's kind of in a situation that, why this is happening and what is the future if the policy of the government is not clear. Is there any point on continuing to buy a CNG vehicle? But, today also, CNG is 82, diesel is at 72, 92. There is a margin. But, the kind of margin that he was enjoying, that is not there now.
Right.
So, there's definitely a kind of, customer thinking now. Before, customer didn't need to think. Because, 50 rupees, 18 and 90 rupees, there's no thinking,
Yeah. 10 rupees differential is not that big advantage.
So now when the customer is making a decision, it is really on the infrastructure available in that place, CNG, benefit of CNG. So now you are finding that, but what the good thing is that you are finding a genuine market for a product. So you are finding a competitor for a fuel that's always been there. So maybe in the future, that this share will continue to grow. Yeah, if the price, if the things become okay globally, maybe the difference can be immediately affected, and then you will see that diesel will eventually, maybe in the next 3, 4, 5 years, diesel will not be available or disappear. But because the differences become so less, the diesel is still existing.
Right. So the difference exists.
Not cheap. Yeah. Sorry. Yeah.
Sorry. So I said, if the difference stays at 10 rupees or something in this range, then we might not see a very big comeback from CNG CV, right?
You will not. Yeah, you're right. But it is gradually eating into the market. You see, yes, you might not see but the thing is that CNG is slowly eating into the diesel market.
Okay.
So yeah, the growth might be, the things that we're expecting to happen in 5 years might take 10 years.
Right.
But it is going to happen. See, eventually diesel is a problem and everybody in the country, including the government, feels that it's a problem and CNG is a solution that they have. So they are definitely seeing this as a solution and they're supporting that solution.
Right. So don't you think if this difference stays at 10 rupees, then the incremental sales will move to EV?
But see, on a buses, EV is a very, very expensive solution today.
Right.
So, EV is a little, and plus, you have infrastructure of charging, those kind of things are going to take some time. So, EV on a buses is quite something that's going to take some time.
Okay. So, just one more on this is, what do you think will be a differential, the gap differential between CNG price and diesel price to, accentuate the demand? Right now 10. So do you think at 30?
At least, if 25% is the difference, could be a great driver. Because 25% is a great gain for a customer who's buying a vehicle.
Okay. So around 20 rupees.
Calculating his return on investment, right? He has to pay EMI, he has to pay. So even if 25% means his whole return on the vehicle comes much faster, and this is what the customer wants. Because infrastructure is growing. See, there are 5,000 stations. Government wants to go to 15,000 stations. So definitely infrastructure is growing. Only thing is that this gap is the customer has to think on this gap, that the gap of 10% is not very, very exciting for him. It's exciting, but is not making it very exciting.
Understood. So, okay. So on Cascades business, how do you think FY24-25 are looking at it?
Definitely, the Cascade business will be there, and we are hoping that, more projects come. So Cascade is more of a, tender-based business. So, we are waiting for more and more projects to, get released. So hopefully it should be, probably something in line with last year, probably.
Okay. So flat over last year, and then maybe FY25 will look at some growth?
Yeah, definitely it will continue. But the business will continue. It will be a continuous growth will be there.
Okay. So how much growth can we expect in this business FY25?
Now it will be kind of similar.
Okay. FY25 also flat.
Yeah.
Okay. Another last question was on the international side. So which countries, which geographies should do well for us FY24, or where are we focusing?
So I think in Dubai, we'll have the similar kind of growth. Dubai and US will see the similar kind of growth that you've seen last year.
Okay. So our focus and our efforts will be driven to Dubai and US markets.
Yes.
Okay, sir. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Vishal from Swan Investments. Please go ahead.
Thank you for taking my question, sir. Sir, my question is regarding if you see last 3-4 quarter trend of India business, it's been declining. In fact, quarter on quarter, 180 crores to 166 crores. And if you commensurate with, CNG prices have fallen from almost 90 odd rupees per kg to almost around 80 odd rupees per kg. So are we not seeing any traction or something?
Traction. But only thing is that the kind of impact because of this sudden change, lots of inventory build-up at the OEM level, that is being kind of liquidated now. So you definitely will see that will show up in this coming year, that you will have that advantage of the business that comes in.
Okay. So from here on, if the CNG levels remain at this at around 80 rupees, you are seeing as our high cost inventories get liquidated, the advantage from the demand side will happen, and other from the cost side also it will happen, and you may see improvement in the gross margin.
Yes.
Okay. Sir, in terms of international business also, US in last 3-4 quarters have been very lumpy. Starting from June, it was around 58 crores, and September last year it went to around 110 odd crores, and gradually now around 55 crores. In between last quarter, it has clocked near to 80 odd crores. So what kind of run rate should we assume going forward for US?
So I think 50-55 should be something that we can, like the last quarter. Last quarter? Oh, yeah, current quarter.
Okay. And similar level for UAE, as you said, for the earlier call?
Yes.
Okay. And sir, what is the kind of others which we have seen in this segmental revenue? Which are these areas for us?
Sorry, what? Sorry, can you repeat that?
There is a section of others, so I presume it may be other smaller countries.
We have a branch which sells, so there's others which come there. And plus any other item which doesn't get reflected in any of the segments, that gets reflected.
So it has started contributing really well. In fact, the sales have almost doubled. So are we seeing any traction there? Something you would like to highlight there?
No, it will be normalized.
Okay. Sir, any guidance you want to give for FY25? How are you seeing the overall, in terms of how are our business heading in terms of top line growth or anything on profitability? And one more last point, sir, in terms of your CAPEX guidance.
Yeah, so I think CAPEX guidance we have
already announced this project. So.
Yeah, we've announced some projects. So CAPEX, how much is it?
40 crores.
40-50 crores is the CAPEX plan.
Okay.
Yeah.
Okay, sir. Any guidance in terms of, you are seeing top line to grow in FY24 and gradually in 25 and your market expectation?
Giving you some ideas on, how the business is going to look. I think you can, take some idea from there that how we are, how the business will progress.
Okay. Thank you, sir. Thank you and all the best, sir.
Thank you. We have the next question from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, thank you for taking my question, sir. My question relates to this cascade business. So how much percentage of revenue come from this cascade business in our total revenue of India operation?
How much revenue comes from that? Maybe 30%.
30% of total revenue or India revenue?
Total
revenue, including this US, UAE, India all together.
Yes.
Okay. And that is likely to remain more of a flattish this year.
Yeah.
And second thing is this composite cylinder.
Yes.
Do we have technology with us or we need
So
to...
what we've done is we've already launched our composite cylinders for Indian market.
Okay.
Yeah. So we should be expecting some good results probably in this year from that also.
So composite cylinder even in cascade also you had launched?
Yes, for cascades only.
Acha. And have we bidded for any tender in that?
No, not yet. We have just launched. So hopefully, in the coming tenders, we'll definitely be there.
So do we need to take any approval from or...
Yes, you have to take a PESO approval for everything. So we have PESO approval.
Acha, we already have approval.
Yes, we have approvals.
Okay. All these IOC, HPCL, BPCL and all.
Yes. Everywhere. We have to take some approvals. We have those approvals in place.
Okay. Cascade from composite cylinder.
Yes.
Okay. Great. That was something we were not aware. This technology you got, I think you have in US operation has cascade medicine, composite capacity. Technology. There from you got that.
Sorry?
You got this technology in US operation and which you are using.
We have something that we have been working on. So we have been closely working with the US and something in India, and we've been able to put everything together and make the product ready. So these composite cylinders even need some government approval, in the sense some regulatory approval also. Yeah, that regulatory approval is PESO, Petroleum Explosive Department. Yeah. So that we already got. Yes. Petroleum Explosive and Safety Organization, PESO. So that we have. Okay. Yeah, without that you cannot do any sale in India for our product. True. Yes. Great. Thank you very much. Thank you.
Thank you. The next question is from the line of Himanshu Singh from Prabhudas Lilladher. Please go ahead.
Hi, thank you for the opportunity. Can you just tell me what is the revenue split by segment for you? You said that cascade is around 30%, and what would be the remaining 70% from?
So balance 30% is the other CNG products for automobile.
30% from CNG automobiles. Okay. And the remaining 40%? 40%
is industrial.
Industrial. Okay. And so more in the automotive segment. So how, what is your market share in the segment, in the automotive segment?
Market share, it should be around 50%.
Okay, so this is from on the OEM side or aftermarket as well?
No, OEM side. Aftermarket really there's not much of a market.
Okay. So and most 90% would be OEMs.
Yes.
And you have you supply products to all the OEMs, top OEMs?
Yeah, most of the OEMs. Most of the OEMs we supply.
Okay. And how do you see the CNG penetration going forward in the automotive industry? Or do you see, like currently it is around 10-12%. How do you see it going forward?
No, I think it will continue to grow because as infrastructure grows, definitely it will continue to grow.
Okay. Do you have any number in mind, like next 5 years, we see this 10% going to 20, 25?
No, it was really, before, the way it was growing so fast because, the price of the CNG was so, it was perfect for this business to grow very fast.
Mm-hmm.
But because of the price of the CNG, the slowdown happened. And, it's really a mechanism of price. But what we can see is that even at this rate, there is a business that's, happening. So definitely, the pace has slowed down, but it has not stopped.
Okay.
So there is a good market out there, and it'll continue to grow.
Okay, sure. And just on the timeline for your capacity expansion from 0.9 million units to 1.8, what is the timeline for that?
So we are currently slowing down on that because the market situation. Current utilization levels are not allowing us to kind of go on expanding capacity.
Mm-hmm. Okay. So it's getting delayed.
Yeah. It's like kind of slowed down. Yes.
Okay. Sure. Thank you so much.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Amit Kumar from Determined Investments. Please go ahead.
Yeah, very good evening to your team. Just one sort of point. I just want to understand the difference between the CV and the passenger market, passenger car market from a CNG perspective. Because, while the CV market, the CNG CV market has taken a pretty sharp hit last year, the CNG passenger vehicle market has actually grown by an eye-popping 40%, last year. So, the cost of the fuel is basically, the same for both CVs and passenger vehicles.
No, what the problem is, the diesel fuel is at $90. Petrol is at $100. So that difference for CV market, it's a big impact. Because CV is always comparing it to diesel, not to petrol. The PV market is always comparing it to petrol.
Okay.
Yeah.
No.
So in the PV market, the major manufacturer is Suzuki, where we are not catering. We are working very closely with Suzuki also, on getting that business. So probably, our team has been, having close coordination with their team. So hopefully we should have some breakthrough.
Which was my second question that, traditionally you've sort of always said that CV business, more complex business, it's a more high margin business for you. But looking at the market situation, clearly the, passenger vehicle side has, more momentum at this point in time.
Correct. Yes.
And still quite small. Out of whatever 4.5-5 million vehicles.
Yes.
Unlike CV side, just about 5-10%, and PV is still 5-6% kind of penetration. So when can we sort of expect, some sort of, not talking specifically with respect to Maruti, but there are a whole bunch of players in the market now. Now Maruti has an entire lineup of CNG vehicles, available. So everybody else will sort of follow the leader as well. So when can we sort of expect some sort of breakthrough, in terms of ramping up our business on that side?
No, so we are working on it. Hopefully, we'll have some breakthrough this year. Probably something, would happen. So we'll definitely get some breakthrough here.
Okay, that's really, really helpful. Thank you so much.
Yeah, thanks. Yeah.
Thank you. The next question is from the line of Harsh Saraswat, an individual investor. Please go ahead.
Hi, good evening. So my first question would be on the PV side. Have we got any breakthrough apart from Maruti, like Tata and all? And is there any, volume commitment from them? Something like that has developed?
No, so we are currently supplying to Hyundai, on the PV segment. and Mahindra, and at the Tata we are supplying at the ACE level. All the vehicles are being made by ACE. So we are supplying, but the business volume is still picking up. So hopefully there will be certain growth in the volume. Hopefully we will able to catch. We are trying to get more and more volume on this business.
Got it. So my second question would be on the inventory levels. Now, for last few quarters, we have been talking about the inventory, which is now getting freed up. In Q4, we saw some, development on the revenue side. Our revenue started picking up in Q4, and now in Q1 again they have dipped. So, should we expect that this was the quarter where almost all of the inventory has been freed up, and going forward we should see growth in the numbers?
Yeah, there's slightly improvement will be there, definitely.
Okay, so not majorly, not going back to the...
There will be definitely some improvement.
Okay. And on the USA business also, I wanted to ask, what is the margin guidelines over there? Like we saw, very big spike in the last quarter, and now they have just, fallen down. So any guidance on that?
Margin will probably, you can take this quarter as a guidance. Probably some idea you can get.
Okay, so should we take this as the standard?
More or less this.
Okay, so 10% around levels.
Yeah, it should be okay.
Okay, thank you so much.
Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. We have no further questions. I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Yeah. Thank you once again for your interest and support. Should you need any further clarification or would like to know more about the company, please feel free to contact our investor relation team. Thank you.
Thank you. On behalf of Everest Kanto Cylinder Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines.